AM and 106.9 FM, KGGR.
Hello, hello, and welcome to this favorite one to this. Well, let's try that again. Hello, and welcome to this portion, this segment, which is, of course, one of my favorites, Rob, because I am always excited when you can tell me how to save money, when you can tell me how to live inside of my bank account. I'm just always excited about it every Friday. So, how you doing, sir?
I'm doing really well today, Autumn, and I really want to talk today about something very specific because I've
Yes.
been getting so many questions about it, and that is debt consolidation or home
Mm,
equity loans. Home equity loans are obviously you have to own a home before you can take the equity out of the house.
of course.
But this is something that is really important for everybody to understand and everybody to realize. So if you have a home and you have equity in that home, you can go ahead and eliminate all this credit card debt that you're carrying right now with that home's equity. Save yourself thousands of dollars in mortgage interest, save yourself thousands of dollars in payments every month, just by refinancing and taking the equity out of your house. And I don't think that enough people really understand. I don't think most people really understand exactly what the value or benefit is of home ownership. This is, a home's equity is one of the reasons that we truly do these or purchase homes to begin with. A home over time builds up equity. Equity is the same as profit, for lack of a better term. If
Right.
you have equity in your house, this is the right time to use that equity to refinance and eliminate as much debt as you possibly can. That is, regardless of where the interest rates are. Get rid of all that consumer debt because there is no definitive answer as to when the economy is going to turn around.
Right.
Projections right now say that at some point rates will begin to go down. They're not going to go down fast. It's a given that rates go up much quicker than they go down. So don't procrastinate, don't put off, do not self-diagnose your situation. Use that home's equity and let's consolidate as much of the debt as we possibly can. Your volume's gone.
Yeah, I was trying to turn it.
There you are, you're
Um,
back.
you're absolutely right because we love to use that don't self-diagnose term there. But you said you were getting calls though about paying off debt or debt consolidation. What specifically are they about? Because in my thought process, I'm thinking you get the money and then you use that money to pay off your debt. Is it,
That's simple.
okay.
Yes, ma'am. So let's use an example. Let's say somebody purchased a home 10 years ago and they bought that home for $200,000. Now that home is worth $400,000
Right.
and they owe perhaps $150,000 on that home. So they've got a large amount of equity just sitting there doing nothing that they can use for the purpose of eliminating their credit card debt, eliminating a car payment, whatever else may be a hindrance to them. We can pay all of that debt off for them simply by taking the equity out of their house and paying that debt for them at closing. I don't necessarily have to give them a check for $60,000 or whatever money they take out of the house.
Right.
We can go ahead and pay that debt for them at closing to ensure that the debts actually do get paid. But
Okay. So you can actually pay it for it. Okay.
yes, ma'am. Yes, ma'am. But the point to it all is living with debt is very uncomfortable for everybody who has debt.
Yeah.
I'm uncomfortable with it. Everybody I know that has debt is uncomfortable with it. If you have an ability to eliminate it, this is the right time to be doing that before the debt gets out of hand. Um, don't drown from lack of trying to swim. You need to get in there and use your home's equity as a financial tool to make everything make everything even out.
Yeah, and I think that that's really good because I didn't know that. I thought it was, you know, the only way you do it would be to cut me a check and then I take care of that. So I think that is really good that you can actually pay the debt directly.
Right,
That's an
right.
awesome thing. So I'm excited about that. Now, if you want to call in with questions, 972-988-1040 is the number. That's 972-988-1040. Feel free and go ahead and give Rob a call right now. Now, if you don't want to call right now while we're on the air, Rob, go ahead and give your information.
Yes, ma'am. My direct dial telephone number is going to be 972-739-2350. That is 972-739-2350. You can also reach me directly. Go to Lenders Texas, spelled out LENDERSTEXAS.com.
Now, Rob, I'm wondering, there were 2 calls that came into the station to get your number, and they were both veterans. So it's kind of wondering if you got those veteran calls, and if you did, what the situations.
Well, I mean, honestly, I don't know how recently they called in. I speak to people all day, every day. So
literally about 3 days ago. This week.
Yeah. I'm not sure specifically who it may have been, but I do so much work with veterans,
Yeah.
We are so unique in the way that we treat veterans. Not just the fact that we have no credit score minimums and not just the fact that we'll go to a 65% debt ratio, but the importance that veterans carry just within our company. The fact that a veteran is someone who is willing to literally give up everything for me, it is just overwhelming, and I think that's a company perspective. We all feel the same. I love working with veterans. I'm not sure if the individuals you spoke to called or not, but if not, I certainly encourage them to call. Again, that number's 972-739-2350. One more time, 972-739-2350. And I'm here to help. I'm here on the weekends too, if you need me. So just give me a shout.
Okay. So are you pretty much 7 days a week where they can call you on a Sunday if need as well?
If they need me to, I'm available on Sundays. Yes, ma'am. Typically after after church, after brunch, what have you. But yes, I'm available anytime you need me. Just give a call, and it's clearly an honor to help anybody, specifically a veteran.
Wow. All right. And you can call here right now at 972-988-1040. If you have a question right now, 972-988-1040. Well, Rob, we're getting ready to go into the fall season.
Yes.
And so is this a good time to buy as well? Or do you see many houses being purchased around this time?
Well, yeah. I mean, I think this is a good time to buy for a couple of reasons. And actually, I was up at my offices in Colorado here earlier in the week, and we had a big discussion about this. Right now we're seeing home prices starting to fall in several areas. We're seeing a lot more opportunities where sellers are paying the buyers' closing costs, and there's more access. There are more homes on the market. So the projection from what I've been able to decipher is that we will not get into a situation where there are significant foreclosures, but I do believe that we will see more homes come into the market as this economy continues, just because people are struggling with those payments.
Wow.
And if you are one of those individuals and you're watching us or listening to us right now, if you are struggling with your house payments, don't wait until you miss your payments to take action and to give us a call. As soon as you identify that you are unable to make a payment or uncomfortable with it, call your mortgage lender, or call me, and I can try and help you find a way to maybe refinance through it and put you into a better position. but I think one of the worst things that people tend to do is be optimistic and
Mhm.
say, well, hey, I can't make my payment this month, but I know I can make it next month. I've got money coming in. And if you are going to fall behind, reach out and tell somebody, reach out and tell
Yeah.
your lender so they at least know what's going on, and they can work to your advantage. This is a rough economy right now,
Yeah.
and there are a lot of people who are struggling, but conversely, there's also a lot of people who are buying homes right now.
Yeah.
So I think it's all very relative to the specific situation. It just happens so fast, and that's really really kind of the
Real
overwhelming
thing.
piece here. Inside of not even an 18-month period, inside of perhaps 12 months,
Yeah.
the whole economy just turned upside down. And while there's still a lot of opportunity out there, and while there's still a lot of people that are buying homes, gasoline is expensive, food is expensive. Just the necessities of life are probably up 30 to 35% from where they were a few years ago.
Yeah. Yeah, that's true. So Rob, if I am a couple of months behind, can I still refinance, or would I need to catch up first to refinance?
It depends. It depends on what a couple of months looks like. If you are behind, there's always a possibility of refinancing.
Okay.
How much you're behind is clearly going to be important. But again, the bigger conversation to have here is, don't let yourself fall behind. Reach out and speak to somebody about putting you into a forbearance or some sort of a situation, some sort of a scenario that allows you to keep moving in the right direction and doesn't negatively impact your credit. Because two things happen when you get behind on a home. Obviously, when you get behind at a certain point, you have a risk of losing that house for whatever reason. But more importantly, you don't just lose the house, you also damage your credit. So buying another house is going to be that much more difficult.
Right. Right.
Um,
And the reason I asked that, Rob, is because a lot of times you don't really know you can't afford it until you can't afford it, until that first month you were behind. And so I've had the question before where people wanted to use it as kind of a bailout.
Right. There are no true bailout loans like we saw back in 2008, where it was commonplace for these things to happen. And I don't feel like it's going to be a widespread problem either. But I do believe that these things will need to be addressed in the form of refinancing. That's possible, but it's all going to be very relative to exactly what the situation is, and everybody has a different situation on it.
Mhm,
Mhm.
So what about in the situation where you want to refinance, but then let's say their credit has dropped? So at that point, does it become more of a not right now, or you need a cosigner?
It depends what the purpose of the refinancing is for. If the
Okay.
refinancing is to take equity out of the house, then it quite probably would be not right now if you're too far behind. If you're just refinancing to eliminate the current interest rate or put yourself into a better position, you can refinance a VA loan regardless of credit. You can refinance an FHA loan regardless of credit. So those are streamlined loan products. And as rates tend to change, as rates go down, when they start to go down, we'll see a lot of that activity in the marketplace. A lot of people refinancing because right now they're closing loans in the sevens. It's anticipated that we will see rates go down. It's just a matter of when. And it's really kind of crazy because just as a consumer, you almost feel like they're doing these things to you personally.
Yeah.
And that's very hard. It's very hard for me to be on both sides of the coin. There's absolutely nothing personal about what the government is doing to us. They're trying to help us in the long run by hurting us in the near term. That's kind of an odd way of looking at it. And it's very painful for a lot of people. But on the other hand, you've also got a lot of individuals who are taking advantage of the opportunity, buying houses with the intention of coming back and refinancing them when rates are lower. That is probably the smart way to deal with it right now. If you want to buy a house, now is the perfect time to be out there in the marketplace. You'll be refinancing it probably within a couple of years.
Mhm.
And at that point in time, it's a win-win for everybody. So again, my number is 972-739-2350. That's 972-739-2350. And just give us a call. Let me help you through the process. It is it's a period of compromise in our lives, but this is the right time to become a homeowner if you are wasting if you're wasting money, throwing money away on rent in any form or fashion. This is the right time.
It's the right time. Is there a cost associated with refinancing?
It depends on the type of refinance. If the refinance is a streamline, then there is typically no out-of-pocket costs from the borrower at all. It's all rolled into the transaction. But again, I think that what we're going to see is right now people are buying homes, and they're buying homes at these higher interest rates. When rates start to drop, that's when we're going to see a bunch of refinancing activity.
Yeah.
And we want everybody to be ahead of the curve if it's at all possible. I don't mean go refinance your house today, because a lot of refinancing is driven by benefit to the borrower. But if you're refinancing to use your equity to eliminate debt, that is the right thing to do. Because you can refinance a refinance loan. I mean, you could refinance today, eliminate all of your debt, and then when rates drop here, 18 months or a couple of years, when rates drop low enough to where it makes sense, you can refinance again and get yourself back in with a lower interest rate, and it's a win-win situation. Main thing is you got to start somewhere, and with all this crazy economic news that we're hearing, one day the economy is improving, the next day the economy isn't, then 2 days later it's improving again. Just call me and give me an opportunity to try and help you walk through the craziness of what's going on right now, and take advantage of the situation that's in front of you, because it will be a life-altering decision.
Absolutely. All right. That number to call is 972-988-1040. If you want to call us right now, 972-988-1040. Now, Rob, I'm going to hit you with a personal question here. Have you had to refinance?
Yes.
Really? How many times?
Couple of times. I mean, the house.
So was it a quick, easy process for you?
Yes, ma'am. Yes, ma'am. The house I'm living in now, I've refinanced a few times, taken equity out to eliminate bills and deal with the kids going to school and some of that stuff. So, I mean, that's the purpose of having equity. Equity does you no good just sitting there. So I want you to imagine, that you have $200,000 of equity in your house, and then you've got $50,000 of debt that's just killing you every month. That $200,000 of equity does you no good whatsoever sitting in your house, but it's a big advantage when you use it to eliminate that $50,000 worth of debt.
And the rest of the money, I could just keep it?
Leave it in the house. I mean, I'm not suggesting that everybody take all their equity out of their house. What I'm suggesting is that you make a wise financial decision and use that equity any way that you can to eliminate as much debt as possible, because debt is a cost. First off, the most debt I'm seeing right now is at an interest rate of 29%, which is crazy. Crazy. But but more importantly, let's look at that. Let's look at that 29% practically. If you owe $50,000 in debt, 29% on $50,000 means you're paying almost $15,000 a year in interest. Just in interest. That's before you eliminate any debt. If you've got that money in your house, you need to use that money to go ahead and pay debt. And it's not difficult. It is driven by credit to a large extent. So that is one reason why we need to keep our credit at least in the right place. If not as strong as everyone else, we at least should be making an effort to improve our credit. And if you're having issues with your credit and you need help with your credit, do not throw your money away on these credit repair companies. This sort of segues into another conversation. I saw this week somebody who was paying a credit repair company $550 a month to eliminate their debt. And what these companies do, not all of them, but what this company was doing was they told the consumer not to pay any of their credit card debt and to let it charge off. And at the same time, they were giving this company $550 a month, and the company was going to go back and renegotiate that credit card debt once it had all charged off or gone into collections.
But doesn't that make it worse when it?
Yes, that's exactly what happens. It makes it
and they're
much
supposed to be fixing the credit.
It makes it much worse. So what they're doing is representing themselves as debt consolidation companies. So they're saying, if you owe $50,000, we're going to consolidate all that debt into maybe 2 years worth of payments at $500 a month. And we're going to get the creditors to take a hit on everything. But the only way to do that is to let all your debt go bad and allow them to go in and negotiate a resolution. And most people don't want to let that debt go bad. If people understood up front how these debt consolidation companies truly work, I don't think the vast majority would do business with them. A debt consolidation loan on your home's equity is entirely different than going to a debt consolidation company to try and eliminate your debt. When you put yourself into a repayment situation like that, you're doing something that is almost similar to a self-imposed bankruptcy. It's very, very debilitating to your credit. And with that being said, I'd be extremely careful about giving somebody an opportunity to get in there and tell you not to pay your debt. You should always attempt to pay your debt if you make it.
If you can, pay your bills.
Yes, ma'am. I mean, you should. And now again, we're coming out of this great economy where everybody was doing really well, and paying those bills was maybe not a challenge. But now in a tighter economy, things have slowed down, expenses have gone up. All we can do is our best. That's clearly the answer. But if you have equity in your house, use it to eliminate debt. I can't stress that enough.
Wow, I love it. Okay, again, if you want to call, that's 972-988-1040 to talk to us right now, 972-988-1040. Rob, I love the fact that the advice that you're giving is things that you have gone through as well yourself. So refinancing, you said you've done it a couple of times. So there, guys, it can't hurt you to do that. And Rob's office is kind of a one-stop shop. So you need realtor, you need credit situations, you need whatever you need, call Rob. He might even bring you a meal. I don't
know. Again, I think home ownership autumn is something that has a lot of people nervous, and it makes a lot of people upset and very anxious and uptight.
Yeah.
Becoming a homeowner is the best thing that anybody can possibly do as far as a financial decision. Home ownership, while it is not always attainable immediately, offers so many significant benefits to the consumer. And I think when we, once we get out of the habit of renting, once we get out of the habit of walking down to the leasing office every month, or or sending a check to our landlord or whatever. Once you're creating your own bank account, it becomes very clear and apparent exactly what home ownership is all about. I work with so many first-time home buyers, and I love the opportunity to educate and inform. I feel that there is just huge misinformation. As a matter of fact, and I know we don't have a lot of time left, but I think I told you I was in Colorado this week, and the Uber that I took from the airport to get to my office there, the driver was a veteran, and we began talking, and everything I told him about a VA loan, he had no idea, none. He said, I discharged, they never told me these things. They never told me these things. And I'm renting an apartment, I'm paying $2,100 a month, and I never knew that I could become a homeowner so easily. I never knew that the opportunity was there. I never knew that someone could close a loan without a minimum credit score because I'm a veteran. I never knew that I had a 30% increase in my allowable debt to income ratio because I'm a veteran. These are very important.
But why is that, Rob? Is it because companies just don't want to tell you that, or because a lot of them don't know?
No, I think it's because I think it all goes back to when a veteran discharges. I don't think they're properly educated as to what all their benefits are.
Okay.
I think that's part of it. The other part of it is Mortgage Solutions, Lenders Residential Mortgage Team. I have access to product that other people just choose not to use. I will close a VA mortgage loan specifically using the underwriting guidelines, the minimum acceptable guidelines that the VA issues out to lenders. When you go to a broker, when you go to other lenders, they're going to put credit score criteria on there, like you need to have a 660 score or a 620 score. That's where a big part of the rub comes from, because this is it's a sales opportunity, right? So you're not going to have a lender, and you're not going to have a lender typically say something to you like, well, there's no real minimum credit score criteria on VA loans, but my company wants to see a 620 credit score.
Oh, I get it.
Because it's all about sales.
It's all about sales. I got you.
But that's not what the VA wants. The VA wants every veteran in a home, and that's what we do with Mortgage Solutions. We put every veteran possible into a home. I've helped hundreds, thousands of families get into homes that thought they couldn't become homeowners. FHA loans down to a 500 credit score. It's all about trust. It's all about finding that right person. And I just think, quite literally, too often things are confused in the transaction. If you're a veteran and you're not a homeowner, you need to give me a call. My number is 972-739-2350. It's 972-739-2350. I guarantee I will put you into a home. You got to start somewhere.
There you have it. All right. Thanks, Rob. So on next Friday, tune in with more information. Thank you.
More adventures in mortgages.
Yes, I like it. Thank you.
God bless you. Take care, honey. Have a good weekend.
Bye-bye.
See you. Bye-bye.
Invites you to tune in at 1 p.m. on Fridays for our weekly interview with Rob.